Welcome to the deep dive. Today, we're diving into the world of cryptocurrency, specifically why people lose money, even when they know about those crypto bull cycles. Our guide for this deep dive is a piece from Byte Eagle News. It's called Why Many People Lose Money in Crypto. Buckle up because we're about to unpack some serious emotional baggage.
It's always interesting to see how human psychology intersects with the market, especially in a space as volatile as cryptocurrency.
Totally. So before we get into the emotional roller coaster, can you give us a quick overview of what bull and bear markets are all about, especially for someone who might be new to crypto?
Think of it like a wave. A bull market is when the wave is rising, prices are going up, and everyone's feeling optimistic. On the flip side, a bear market is when the wave crashes, prices fall, and there's a general sense of pessimism.
Okay, makes sense. So in the crypto world, these waves or cycles, as some people call them, they aren't random, right?
Exactly. Byte Eagle News points out this fascinating 4-year cycle that's been pretty consistent in the past. They observed this in both the 2014 to 2018 and 2018 to 2022 cycles. According to their analysis, we typically see about 3 years of a bear market, followed by 1 year of that glorious bull run.
Interesting. But here's the thing, if this 4-year cycle is so well known, why do people still end up losing money? It seems like you just buy during the bear market and sell during the bull market, right?
That's where human psychology comes in. You see, it's not just about understanding the market, it's about understanding ourselves. We're not always rational, especially when it comes to money, especially when we start picturing those potential profits.
Okay. So it's not just about timing the market, it's about mastering our own minds. Tell me more about what Byte Eagle News has to say about this.
Byte Eagle News dives into the emotional side of investing by outlining 5 distinct phases that often follow a new all-time high, or ADH. You can think of it as the peak of that bull market wave. They call this the red phase, which kind of hints at the danger lurking ahead.
So when a cryptocurrency reaches a new ATHI, the highest price it's ever been, that's when the red flags start waving.
Not necessarily red flags, but it's definitely a point where emotions can start to get the better of us. The first phase, according to Byte Eagle, is complacency. We see that new ATHI, we think, this is amazing, this rocket ship is just going to keep climbing, but then the price inevitably dips a little.
That's when that little voice of doubt starts creeping in. Right?
Exactly. And that's where the second phase anxiety sets in. It's that feeling of, oh wait, maybe this isn't going up forever, maybe I should have taken some profits.
I can totally relate to that feeling. I think everyone who's ever invested has experienced that little pang of anxiety when the numbers start going the wrong way.
It's a very natural reaction. But here's where it gets tricky. Instead of making a rational decision, many people enter the third phase, denial.
Denial, like pretending the dip isn't happening.
Precisely. It's that this is just a temporary dip, it'll bounce back any minute now kind of thinking. And sometimes it does bounce back, which just reinforces that belief.
So that temporary win can actually make it harder to see the bigger picture, right?
Exactly. But what happens when the price keeps dropping and that little dip turns into a bigger slide?
I have a feeling that's when the real panic sets in.
You got it. The fourth phase panic is when those unrealized losses start to feel very real. It's that sinking feeling in your stomach as you watch your portfolio shrink. This is where people can make some of the most emotional and costly mistakes.
Like selling everything in a frenzy.
Yep. The fifth and final phase of this red phase is capitulation. You just can't handle the stress anymore, you want out. So you sell your crypto, usually at the worst possible time, at a significant loss.
Ouch. That sounds painful. But wait, there's more to the cycle, right? What happens after you hit that point of capitulation?
It is painful, but as Byte Eagle News points out, it's not the end of the story. This is where they introduce the yellow phase, which focuses on the emotional journey during the accumulation period.
The accumulation period. So this is after the big drop when things have calmed down a bit.
Exactly. It's that period where the market isn't going up or down drastically. It's sort of trading sideways, consolidating.
And what's happening emotionally during this time?
Well, if you've just gone through the red phase and sold at a loss, you're probably feeling a mix of anger and depression. It's natural to feel those emotions after experiencing a financial setback.
It's like that feeling of, if only I had sold at the top, or why didn't I see this coming?
Yes, there's a lot of woulda, coulda, shoulda going on in your mind. And then as the market starts to show signs of recovery, you might even experience disbelief.
Disbelief, as in you don't trust that the market is actually going back up.
Exactly. You've been burned before, so it's hard to shake that skepticism. You're thinking, is this real or is this just another temporary pump before the next crash?
So you're basically stuck in this emotional limbo, caught between wanting to believe and being afraid to get hurt again.
That's a great way to put it. But here's the thing. Even in that state of uncertainty, a glimmer of hope starts to emerge. Maybe you see some positive news about the crypto market. Maybe a friend tells you about their recent gains. It's subtle, but it's enough to plant a seed of optimism.
So the yellow phase is like this emotional battleground where you're processing the pain of past losses while simultaneously starting to believe in the possibility of future gains.
That's a really insightful way to describe it. The yellow phase is all about reflection learning and gradually rebuilding that sense of trust in the market. It's a critical phase for preparing yourself mentally and strategically for the next bull run.
Which brings us to the exciting part, the green phase, right? This is where those feelings of hope and optimism really take off and things start to get euphoric.
Yes, this is where the wave starts to rise again. As the market breaks through its previous teeth, those initial feelings of optimism evolve into belief. You start to feel confident in your investments. And as the price continues to climb, that belief turns into thrill. Suddenly, everyone's talking about crypto again. It's the hottest topic at dinner parties, and you feel like you're part of something big.
So the fear of missing out starts to kick in.
Absolutely. And that's when euphoria takes over. It's like that feeling of invincibility, like you can't lose. You see those massive gains rolling in, and you start to think this upward trend will last forever.
But that's dangerous thinking, right? Because we know the cycle doesn't last forever.
What's fascinating is that even with this knowledge, we can still fall into the same traps. We might hold on too long thinking the price will just keep going up. We might even start chasing those risky high-flying coins that promise to make us millionaires overnight.
So it's like history repeating itself even when you know the history.
It happens all the time. And before you know it, the market starts to correct. And you're right back in the red phase, riding that emotional roller coaster all over again.
This is making me think about that personal anecdote that Byte Eagle News shared about comparing themselves to others in the market. How does that tie into all of this?
That's a great point. Comparison is a huge trap, especially in a space like crypto where things move so fast. It's easy to get caught up in what others are doing, seeing their gains and feeling like you're falling behind. But focusing on someone else's portfolio can lead you to make impulsive decisions that don't align with your own goals and risk tolerance.
It's like trying to run someone else's race instead of focusing on your own path.
Exactly. And that's what Byte Eagle News emphasizes, the importance of personal growth. It's about understanding your own strengths and weaknesses as an investor, developing a strategy that works for you, and not getting swayed by the hype or the fear that's so prevalent in the crypto market.
So it's about becoming a more self-aware and disciplined investor.
That's the key takeaway. It's about recognizing those emotional patterns within yourself, understanding how they can influence your decisions, and developing strategies to mitigate those risks.
Okay, let's try to make this a bit more concrete. Can you walk us through a hypothetical scenario of how these emotional phases might play out for someone who's been in the crypto market for a while?
Sure. Imagine you've been holding a certain cryptocurrency for a while, and it finally hits a new 8. You're feeling that initial complacency, that sense of, I knew this would happen, but then the price starts to dip.
And that's when the anxiety creeps in, right?
Yeah.
Is this the start of a bigger correction, or is it just a temporary pullback?
Exactly. But instead of selling your part, you tell yourself, it's just a dip. It'll bounce back. You're in denial, but the price keeps dropping. And that anxiety turns into full-blown panic.
You're watching your portfolio shrink, and you're starting to feel sick to your stomach. What happens next?
This is where capitulation often occurs. You can't take the stress anymore, so you sell your holdings, locking in a loss. You enter the yellow phase, feeling angry and depressed. You beat yourself up for not selling at the top, for being greedy, for not seeing the signs.
It's like that emotional hangover after a bad trade.
It really is. And even as the market starts to show signs of recovery, you're hesitant to believe it. You're stuck in disbelief. But then slowly you start to see some positive momentum. Maybe the price breaks through a key resistance level. Maybe there's some positive news about the underlying technology. That glimmer of hope starts to reappear.
You're not fully convinced yet, but you're starting to pay attention again.
Right. And then as the market continues to rally, you start to feel that optimism returning. That optimism turns into belief as the previous ATH is broken. The excitement builds. The thrill is back, and you decide to enter the market again.
So you're back on the roller coaster, riding that wave of euphoria.
Exactly. But this time you're armed with the knowledge of the cycle, the understanding of your own emotional tendencies. and hopefully a more disciplined approach.
This is all incredibly insightful. I feel like we're really starting to understand the psychological side of the crypto market. So we've really gone deep on the emotional side of crypto investing and how those feelings can impact our decisions. But Byte Eagle News also emphasizes the importance of understanding the market cycle itself, right? I mean, how can we use that 4-year cycle to our advantage?
You're absolutely right. Recognizing where we are in the cycle can be really helpful for setting realistic expectations and making more informed decisions. Remember, according to Byte Eagle News, we're typically looking at a 3-year bear market, followed by a 1-year bull market.
And just to be clear for our listeners, when Byte Eagle News talks about a bear market, they're referring to a period when prices are generally falling or trading sideways. And a bull market is when we see those exciting upward trends and new all-time highs.
Exactly. And as of today, October 26, 2024, Byte Eagle News believes the market is still technically in a bear phase, even though we've seen some recent price increase.
That's interesting. So even though things might feel bullish right now, we could still be in for a bumpy ride. I guess that's why it's so important to understand these cycles and not get swept up in short-term market movements.
Absolutely. The key is to not let those emotions we talked about earlier cloud our judgment. For example, if you know that bear markets typically last for 3 years, you might be less likely to panic sell if the price drops suddenly. You'll have that historical context to remind yourself that these dips are a natural part of the cycle.
That makes so much sense. It's like having a roadmap that helps you navigate the ups and downs. But even with a roadmap, it's easy to get lost if you're not paying attention.
That's why self-awareness is so crucial. It's about recognizing those emotional triggers, like FOMO, the fear of missing out, or that feeling of euphoria when everything seems to be going up.
So how can we actually become more self-aware? Are there any specific strategies that Byte Eagle News recommends?
One thing they emphasize is the importance of journaling or keeping a trading log. By writing down your thoughts and emotions, before, during, and after a trade, you can start to identify patterns in your behavior. You might notice, for example, that you tend to make impulsive decisions when you're feeling anxious, or that you hold on to losing trades for too long because of denial.
That's a great idea. It's like holding up a mirror to your own decision-making process.
Exactly. Another strategy is to have a clear investment plan and to stick to it. This means defining your risk tolerance, setting realistic profit targets, and having a system for entering and exiting trades.
So it's about having that discipline to not get swayed by the emotions of the moment.
Exactly. When you have a plan, you're less likely to make those knee-jerk reactions. That can lead to losses.
Okay, so we've covered a lot of ground today. We've explored the anatomy of a crypto bull run cycle, the emotional roller coaster that comes with it, and how understanding both is crucial for making informed investment decisions. What's the one big takeaway you want to leave our listener with today?
I think the most important takeaway is this. Knowledge is power, but only if you apply it. Understanding the market cycle and your own emotional tendencies is a great first step, but it's not enough. You need to take action, develop a plan, track your progress, and most importantly, be patient. Remember, success in the crypto market, or any market for that matter, is a marathon, not a sprint.
I love that analogy. It's a great reminder that this is a journey, and there will be ups and downs along the way.
Exactly. And the more you learn, the better equipped you'll be to navigate those challenges and achieve your financial goals.
This deep dive has definitely given us all a lot to think about. And as Byte Eagle News reminds us, the best investment you can make is in yourself. So keep learning, keep exploring, and keep diving deeper into the fascinating world of cryptocurrency. Thanks for joining us on The Deep Dive.